When you look at this earnings report and you look at some of the numbers specifically on the revenue per rider, how encouraging is that?
It is encouraging, and what it tells you is that there is rationality when it comes to the ride-sharing market. And what's helping this market compared to the food delivery market, where we saw Grubhub falling 50% yesterday, is this is a duopoly. You know, Lyft and Uber control the market.
No promiscuity in the ride-hailing.
Exactly. Yeah. And so you see that signs of rationalization when it comes to pricing. That's helping drive the revenue per rider. It's helping drive the top line. And I think ride-hailing is a much better market from an investment perspective.
What about just there's always this question about whether current pricing is sustainable or whether they're going to have to really slash what the drivers make or really raise prices eventually. Are we getting any clarity on that? Or just like whether the current model needs some major changes?
Well, the last couple of quarters has shown us that there is price inelasticity because they have raised prices. And especially when you think of corporate rides or airport rides, the niches that these companies are focusing on to drive that path to profitability. Over there, the price inelasticity is more visible. And so you're going to see these companies trying to raise prices gradually, 5% every quarter. And that doesn't seem to hit their top line metrics in terms of ride growth.
So at the time when the two companies went public, there were very different narratives in terms of Uber trying to be all things to all men, food delivery, remaining addicted to the app in some way, shape or form, whereas Lyft very much is getting people from A to B, whether that be by bike or scooter or indeed within the cars. Is Lyft taking the right tack here?
Well, given their smaller size, I think it's the right thing to focus on just ride sharing. For the reasons I said earlier, that it's a duopoly. Food delivery is a very fragmented market. So Lyft is doing the right thing by not getting into food delivery for now. In case of Uber, the value proposition is the bundle. You want to get that subscriber.
So that still has value.
That still has value. And that's the Amazon aspect of, having a platform when it comes to transportation. And Lyft is better off just focusing on the profitable niches. That's why they're not expanding geographically, and that seems to be the right thing for now.